the higher the interest rate is, the more interested you are in having your money in that financial system. If they're offering you, let's say what Volcker did, literally brought rates up to double digits, 10%, you're getting a free, basically risk-free government. I mean, the U.S. government lending is about as good as it gets in the world, right? You're basically getting a free 10% risk-free by, buying U.S. debt and then waiting the duration, whatever it is, if it's a short duration, T-bill or these longer 10-year, 30-year bonds, you wait that duration and you get a free 10%. So all of this money comes flooding back into the U.S. system because interest rates go super high. And so we did see that post-COVID.
In a recent eye-opening interview, Mark Goodwin, the author of The Bitcoin Dollar, uncovered the secret financial system that has been quietly controlling the world's economy. So what's the key factor driving this system? Interest rates. Mark highlighted how the U.S. financial system has thrived by using high interest rates to attract investments. Take, for instance, the 1980s when Paul Volcker raised interest rates to a staggering 10%. This move caused a massive influx of investment as people rushed to buy U.S. Treasury bonds, earning a near risk-free 10% return. But this isn't just a financial quirk, it's a fundamental part of how the global economy operates, especially in times of instability. Goodwin also explored the crucial role of the U.S. dollar and how its dominance is tied to a little-known concept, the petrodollar. After World War II, the U.S. dollar became the world's reserve currency, giving the U.S. immense power over global trade and finance. This system still holds strong today, with the U.S. military presence in the Middle East ensuring that countries must use U.S. dollars to purchase oil. However, the world is changing. As Goodwin pointed out, alternative financial systems like Bitcoin are gaining traction and could eventually challenge the dollar's supremacy. The roots of this financial dominance stretch back to post-World War II policies, and understanding this history is essential for grasping how global markets, governments, and institutions are interconnected. Could Bitcoin truly threaten the U.S. dollar's stronghold? Mark Goodwin's insights suggest that the future of the global financial system is more uncertain than ever before. Watch clips from the interview for further insights into Mark Goodwin's conversation. Please like this video, subscribe to the channel, and turn on post notifications for more content. Enjoy the video.
Extreme signaling all across the board from the Trump administration that we're kind of moving into this new paradigm of, where everything is signaling in media about de-dollarization and BRICS and all this fears. It's like, actually, nope, the dollar is ripping higher than ever relative to other currencies, as we're seeing these supposed alternatives to, dollar hedge fund, like Bitcoin also surging to all-time highs, right? More or less. So, so why is that? That seems to be sort of the opposite of what's been sold to us, right? Probably ironically allow more money printing and more debt pardoning at a time where the dollar probably should be dealing with its debt and starting to lose maybe hegemonic status. We're seeing the opposite happening. And that's mainly, being done through these dollar stable coins that are proliferating everywhere. But let's go back to let's roll it back. Go back to the beginning. The world started in the 70s, right? So we'll start in 71. And yeah, the US dollar at that point was, still redeemable for gold, right? You could. There were still a lot of issues before that, right? A lot of economists like to get sort of pissy about, well, hey, 1971, there was, Charles de Gaulle sending his fleets to the U.S. demanding their gold, well before that, and the London gold pool exploding. And there were a lot of issues with the gold system beforehand, before the Nixon shock in 71, where they officially took us off this peg. But let's bring it back even a little bit further. Why a gold standard at all? Why this sort of a commodity standard? And the general reason is that, value is sort of energy. Money is this communicative tool that basically allows society and tribes to scale beyond just, being this really closed, trusted system of a dozen to 3 dozen people that can, kind of successfully, remember in their heads, basically the ledger of who owes what and whatever. Money allows you to kind of scale to much bigger, networks, which is that's not a bad thing. money gets very
It
demonized.
depersonalizes exchange.
Sure. Yeah, exactly. But it's a technology, right? And it gets demonized a lot because it gets used as a control system and used as a way to divide people and conquer people rather than, bringing people together in this new, technical forum. So money is fine. It's a technology like anything, like any technology can be used for good, used for bad. The internet is one of the greatest panopticons ever built. Also, we're able to have this conversation and bring out information to everybody, and that's cool. Same with money. So the reason why people settled on, gold and silver, these bimetal standards or the gold standard, wasn't necessarily because of conductivity of the metal or shiny gold jewelry. The main economic reason was that it takes a lot of energy to get it out of the ground, right? It's hard to source. It's scarce. So nowadays gold is coming out of the ground, around like 3% relative to its total supply a year. We're like extracting out of the ground. So there's a limited growth of the monetary supply. If you have a limited inflationary commodity that's backing your dollars. So the US government had this issue. They basically kicked everybody's ass, right, in the, post-war, and they were really the dominating economy. And, they were limited by their growth was actually limited by the amount of gold that they could source because there wasn't so much gold that they could get out of the ground. Just because they had economic hegemon status doesn't mean they could create more gold. So, the gold standard was a great idea because it, limits political decision being able to inflate the total supply of your money, which, obviously debases the purchasing power of your money. And again, money is sort of this technology that was created because you have two bartering parties, and you want to limit sort of the shitty outcomes that occur between bartering with like items, right? Like if, say there's two guys, I've used this analogy before, but one has, an apple, has food, and the other has a bicycle. And the guy with the bicycle is really hungry and he needs food. And the guy that has the apple needs to go somewhere to, get more apples. So they do this trade that makes a lot of sense in that moment. The guy trades the bicycle for an apple and everyone wins in the first 3 minutes, right? It's great. The guy that was hungry now gets to eat, and the guy that needed to go somewhere who had an apple now gets to go. But in 45 minutes, that guy that traded his bike for an apple is sitting there and he has no ability to go anywhere. Yeah, his stomach is full, but he can't go anywhere. And the guy that just traded it, or that just got the bike and traded his apple, has now driven 45 minutes down the road on his fixed gear, and he's hungry and he needs food. And so all of a sudden, just as time occurs, time is a humongous part in any, study of energy. Time is, and therefore money, if we're going to use this analogy that sort of money is an energy, there's a huge variance already just when you add time into this equation that has created these two shitty outcomes for both people doing trade. If they had used a financial instrument, a tool, they would be able to still have their items and just have exchanged money and then go find another apple cart, go find a bike store, whatever, and been able to kind of satisfy their needs outside of that like small instance. So money is this thing that allows you to scale, very well from a civilization standpoint. And it's important, and it's a technology, that we should consider, we can tweak things about that. We can kind of, like we change all other technologies all the time. Everything evolves. Why can't money be something that evolves too?
According to Mark Goodwin, the Trump administration's activities suggest a new approach, but the dollar is rising in comparison to other currencies. He also remarked that Bitcoin is surging to all-time highs, which appears contradictory given the narrative that Bitcoin is intended to break free from central banks' influence over financial systems. Goodwin stated that Bitcoin is instead being used to prop up the US dollar, allowing for additional money printing and debt forgiveness. He explained that the scarcity of gold limited the scope of inflationary monetary policies. Goodwin sees money as a technology that facilitates change and scalability, allowing civilizations to expand beyond small networks and pointing out its importance in global discourses. Let's go back to the interview and watch more clips to gain insights from Mark Goodwin.
Well, I would imagine if you're going to have an explosion of spending and then untether the dollar to anything material, that would probably have a compounding effect.
Oh yeah, it started to run away, and we saw some really crazy things happen in the 70s and the 80s as a result of the Nixon shock. And before we get into the petrodollar, which I think is the most interesting, we did see Volcker come in, Paul Volcker, who's kind of the goat of interest rate manipulation. And interest rate manipulation is a little complicated, interest rates in general, but the idea of it is basically the higher the interest rate, the more money you get, the more yield you get for buying government debt. Simplest way to put it. Maybe even a simpler way you could say it is the higher the interest rate is, the more interested you are in having your money in that financial system. If they're offering you, let's say what Volcker did, literally brought rates up to double digits, 10%, you're getting a free, basically risk-free government. I mean, the U.S. government lending is about as good as it gets in the world, right? You're basically getting a free 10% risk-free by, buying U.S. debt and then waiting the duration, whatever it is, if it's a short duration, T-bill, or these longer 10-year, 30-year bonds, you wait that duration and you get a free 10%. So all of this money comes flooding back into the U.S. system because interest rates go super high. And so we did see that post-COVID, and we'll get into that too. But, the highest the rates ever got was during the Volcker era in the 80s, 70s into the 80s. We saw 10%. And so while we should be dealing with all of this heavy inflationary action from going away from the gold standard, we're actually seeing more and more dollar demand than ever, which is sort of counterintuitive, but that's how we basically bribe you to stay in the dollar system by paying you these rates, right? But the fastest, rate increase we ever saw was actually after COVID, when we went down to 0%. Jerome Powell comes in and raises rates faster in history than ever to deal with the inflation of the CARES Act and all that, and breaks all the yield curves and all these things. And we'll get into why. I swear to God, this will all make sense, and I will tie it back to Bitcoin. But the important thing before we get into that happened in the 70s, before the Volcker interest rate stuff started to pop up, was the establishment of a new energy commodity. So we broke away from gold. Makes sense. Right. We're limited by the amount of gold we can take out of the ground. Let's break away from it. Let's go to this free peg, and we can just print money and pay off our debts and pay for our defense budget and all these things. But what happened was, we saw some really funny things happen in 73 and 74. There was the Yom Kippur War in 73, and the U.S. gives a bunch of money, to defend Israel. And, we get immediately, there's an oil embargo, and oil prices go up, 400%, go up just an insane amount of money because the U.S. is being embargoed by, these surrounding Middle East countries that don't want us to play with them. Oil is really important because you need it to industrialize, right? There's very few nations actually that are energy independent, and certainly very much even fewer that have a lot of oil that they can actually afford to be, cut off from the oil supply. So Kissinger and crew, go in, and in 74, they sign this, secret deal. It was kind of obvious in some senses, and a lot of people had talked about it before, but I think it actually came to light from a FOIA, actually somewhat recently, like 10 years ago or something like that it was officially, actually, no, this was a signed thing. But basically they go in and they talk to Saudi Arabia and they say, hey, let's establish a new paradigm of money, and let's have you price oil, this energy commodity that everybody needs, highly demanded, price it in dollars. And all you got to do is price it in dollars. And what we'll do is we'll give you military aid, and we'll defend you, and we'll help you pull it out of the ground. We'll give you a bunch of arms, and you become this dominant figure in the Middle East. And all you got to do is anytime anybody wants to buy oil, they got to buy dollars first. So what that does is it creates, this artificial demand for dollars during a period where we have gone off the gold standard. The dollar is inflating, and it should be flying in the sky, sort of this depegged entity. And now we're forcing every industrializing country in Asia and in Europe that wants to buy oil now has to buy dollars first. So we have billions of dollars of demand for dollars, And so we can basically shovel these inflationary effects that should be sort of hitting the dollar system and should be sort of taking away our net purchasing power. Instead, we have buyers. We have buyers for government debt. We have buyers for dollars. So people are buying dollars. The Saudis are taking the dollars, then bringing those dollars back and buying U.S. dollar debt. And Kissinger called this petrodollar recycling, right? And we've created this new paradigm where we've again, it's not a literal monopoly. Of course, there were some ways you could get oil in the world economy that wasn't dollars, but for the most part, it was. No. So there was a de facto monopoly on oil that you had to buy dollars first, and it sort of allowed us to get out from under this. We didn't have to deal with this inflation because we've made this floating peg to this highly demanded energy commodity. And so we saw this, the petrodollar system. It's very evident that, when you look at sort of macro and global political action just in the Middle East over like the ensuing decades, the U.S. just had a huge presence in the Middle East always.
Mark Goodwin described the petrodollar system, which was established in 1974 when the United States struck a secret agreement with Saudi Arabia mandating countries to acquire dollars before purchasing oil. This produced false demand for the U.S. dollar, allowing the country to inflate its currency without experiencing the typical consequences. According to Goodwin, the U.S. military presence in the Middle East strengthened this system by guaranteeing that countries continued to acquire dollars to purchase oil. He also discussed the importance of interest rates in the U.S. economy, although the decision to boost interest rates to double-digit levels in the 1980s. This brought money back into the U.S. system, allowing the country to print more money and repay its debts while maintaining the value of the dollar. Goodwin also mentioned events from 2001, such as the collapse of Treasury settlements and the subsequent passage of emergency measures. These acts enabled the production of new dollars, backed by government debt. Mark Goodwin pointed out that the Patriot Act, established in reaction to the 9/11 attacks, provided the structure for the surveillance state and the subsequent digital asset paradigm. Goodwin contended that the petrodollar system allowed the United States to maintain its economic dominance, although the dollar's value should have been dropping due to inflation. Instead, the system established a self-reinforcing cycle in which countries purchased dollars to buy oil, and the United States used those dollars to manufacture more money and pay off its debts. This cycle, Goodwin suggested, would eventually come to an end, but for the time being, it remains an important part of the world economy. Goodwin noted that the petrodollar system is both an economic and geopolitical reality. Mark Goodwin maintained that the United States military presence in the Middle East is important to the system's maintenance. He also stated that the system has produced a situation in which the United States may print more money to pay down its debts while maintaining the value of the currency. This, Goodwin argued, has major consequences for the global economy and the future of the U.S. currency. What do you think will happen to the global economy when the petrodollar system eventually comes to an end? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.